Hello and welcome to this week's edition of MarketTrader. We're at an exclusive hotel, the Westbury, in the heart of Mayfair, and we've got you access to what promises to be a fascinating day. Later on in the programme, we've got our book competition, but first, let's go and take a look around.
But really, ladies and gentlemen, what we're here today is to talk about Blink, and the whole of this first session was really about the power and the pitfalls of instantaneous decision making, especially for traders. A lot of this came out of feedback that both ActivTrades and Malta and myself have had regarding people's experience with trading within the financial markets. I'm very fortunate that I have like sit there with 6 to 7 screens that I'm able to look at on information. People come and sit and work with me, and I have to say a lot of the men will come in and start to get screen envy. Okay, they'll come in, look at this is fantastic, 6 screens, this is amazing, look at this, I want this is a great toy, I want this. But actually, you know, for a lot of people, for the majority of people, it's actually counterproductive, because if you don't really know how to sort of, let's say, kind of blockade or block some of the data coming to you, it can actually be immensely counterproductive to your ability to trade effectively. You should be able to trade effectively on a single laptop screen, okay, as well as on a 6 or 8 or 12 screen supercomputer, okay. So don't think that you need to have some sort of flash IT setup to actually be a trader. It's far from it. But what I often see, and unfortunately can't see it, what I often see when I work with private traders is that they show me their screens about how they go about making decisions, and effectively it's just a flood of data coming to them, a flood of data. They've got price on there and 5 or 6 moving averages and Bollinger Bands, and they'll have a zigzag, and they'll have 4 or 5 different indicators all on their screens, all hoping that all that information will actually enable them to make better decisions as a trader. Whereas in actual fact, it tends to be counterproductive. The vast majority of people will actually start to engage or start to experience that analysis paralysis that makes them actually either A, make no decision whatsoever because they're overwhelmed, or B, they start to just make reckless decisions out of sheer boredom, okay? Either way, the outcome tends to be pretty poor. So invariably what actually happens with a lot of the work I do with people is actually stripping away the data, stripping away the information, actually making it as simple and as easy for an individual to look at a chart, to look at some numbers and make a decision about what they're going to do. What you have to remember is really there's only realistically kind of 3 options for you. You can either buy, you can either sell, or you can sit on the sidelines, okay? And sometimes for private traders, what they underestimate the fact is that actually being flat is a position, okay? So what we talk about is starting to strip away that kind of data. So if we can all make these kind of instantaneous decisions, does that actually mean that we just strip away the data and we start acting like Rambo, okay? And that we start treating trades like bullets? We just sit there shooting from the hips in terms of the way we just buy, sell, buy, sell, buy, sell. Well, it might be nice if that was the truth, but unfortunately that's not, okay? There's invariably, even though there is some power in the ability to make instantaneous decisions, there are also some pitfalls. And that's what myself and Malta are just going to talk about for the next 5 minutes or so.
We're joined now by Paul Wallace, who's a trader and mentor. Paul, thanks very much for joining us. So you just touched on traders trying to make decisions with too much information. What would you say the problems of that were?
Well, I think from when I started back in the late 90s, what we saw was that you had to pay for data, you had to pay for news feeds. The sort of internet has kind of opened that, opened the sort of the floodgates, and now traders are exposed to massive amounts of news, of data, etc. And invariably what tends to happen is that humans tend to start suffering from a bit of analysis paralysis. It's too much information, it overwhelms them, and then either they become reckless traders or they just sit on the sidelines just too scared to actually do anything at all.
How can traders trade effectively then with less information?
I think it's really is that kind of like less is more sort of philosophy. It's about keeping it simple, stripping away all the kind of extraneous data, all the kind of extraneous information, indicators that are really sort of flooding an individual's ability to make a good trading decision.
What would would you say the pitfalls would be of instant decision making?
Well, I think, as human beings, especially if you've been trading, you don't really understand that, you're exposed to certain biases, and you need to be able to understand the biases in yourself and be aware of them, and so that you actually start to make informed decisions rather than kind of knee-jerk reactions when something might happen. So if the market, has made a tumble like gold did on sort of at the end of last week and the start of this week, you're actually in a position to make an informed decision rather than just a knee-jerk reaction to chase the market.
So, Paul, I mean, it's been a really great day today. Would you recommend traders come to these events?
Yeah, absolutely. Just on the first thing, there's kind of the social element, namely that for a lot of private traders, they're at home on their own. It's a lonesome endeavour, and actually just the opportunity to be around other individuals engaged in the same activity as them, as you can see behind me, that has immense benefit, just the ability to network with their peers. But also, when I started trading back in the 90s, and I would go to events run by brokers, they were very, very basic. They were really the sort of amount of information given was very weak, very limited. How to draw a trend line, what an RSI indicator was, and off you went. To be fair to ActivTrades, they've been absolutely fantastic in sort of looking to set a kind of a new bar, new standards in terms of being able to deliver educational content to their clients. And so events like this around about psychology and emotional decision making, I think that it's unbelievably important for traders to make themselves aware and available to sort of such events.
Paul, thank you very much.
My pleasure.
I found today absolutely terrific. The psychology of trading is what I actually came for, and obviously to understand risk management. Brilliant. So, guys from ActivTrades have actually done a really good job.
Impressed. I've enjoyed it. I thought the speakers were articulate and knowledgeable, because you can be articulate but not know what you're talking about, but they do. And I also like their manner of engaging with the audience. They asked us lots of questions, and that keeps us on our toes, because it works much better if the audience isn't just passively sitting there, but is interacting. So a dialogue was created. It was very fruitful, and I think it's well run, well timed, well managed, and delivered with sincerity and feeling, because again, you can get people who know their stuff, but they're bored by now. They've got it all off by rote, and there's no passion anymore. And it's the passion that communicates the sort of interest and the fun. So they've kept the fun in what could be a dry subject, because you can tell they are passionate about what they're talking about. So I really liked this morning.
First, the concept of representative heuristics. What do I mean with that? So I talk about a mindset that increases the probability for a familiar event. So for example, if you have seen something in the past, if something has happened to you in the past, and you think about the odds of something, your mind typically changes the odds to the upside, because you have been in that situation, that it has happened. Can be trading, can also be something else, a natural event, God knows what. On the other side, what we tend to do as people is we look at a low probability event and then shift it in one of two directions. One would be, oh, that's really unlikely to happen. It's never going to happen. So we shift it down to 0 because we don't think that lottery ticket will win, which is not true because it has a probability and you can calculate it. Or, and that's really, really dangerous in trading, is say like, oh, this is unlikely to happen, but it will happen to me today because I'm in that revenge trade with the market, and I know it better, and I will win my losses back and will make double amount. And whoever has been in that situation has probably seen that you deplete the last 20% in your account very, very fast because you think that low probability event will happen right now. So the idea here is to create a bit of transparency around that our mind tends to do that. You can quite easily calculate the probability of your strategy, calculate the probability of a market making a decision in a specific area using technical analysis. That's not part of the session today, but what I want to lead you towards is be a bit more objective when you make your analysis and try to understand these patterns and thereby reduce their impact. Another thing that we see is so-called mental accounting. What I mean with mental accounting. In many trading sessions, training sessions we do on trading, people talk about that one trade that hasn't worked, where they lost the equivalent of a nice vacation, where they lost the equivalent of a small car, where they lost the equivalent of something more a singular event that is really a dinner or so, that means something to them. So we as people constantly do that. We connect a loss or a win, typically it's a loss, we connect it with something in our life, and it's really hard for us and emotionally to survive that loss. The way I typically split it is, one part is your trading capital, right? And the other part is your emotional capital. And a loss can have a really bad impact on your emotional capital, and it's typically much harder to rebuild than the real capital. So who has had problems with his emotional capital in the past? I also had. So you.
Well, we're joined now by Malte Kaub, who is Managing Director from the Trader Leadership Council. Malte, thank you very much for talking to us today. We've been listening to you this morning. You've been talking about personal bias in decision making. Can you tell us what you mean by that and how it affects your trading?
Yeah, absolutely. Thank you very much, Cam, for that opportunity. We discussed this morning decision-making processes that are often underpinned by flawed assumptions and cognitive biases. That's something we see quite a lot with traders. Flawed assumptions refers to the idea that there's a lot of information out there that is really hard for traders to translate into actual decision-making. And cognitive biases means that we have that tendency to be irrational at humans and make irrational decisions. And we uncovered some of the concepts here in the session this morning that should help clarify traders how to avoid suffering from cognitive biases.
So you mentioned learning to accept your losses, but don't let them get out of control. Very wise words. What advice would you give our viewers?
Never trade without stop losses and always honor them. That's probably the most simplest advice that I can give there. Many traders ask me, where should I put my stop loss? And a very simple answer to that would be exactly where your hypothesis of the market is wrong. That's really where you should get out. And if you find out in the analysis of your trades that you're not disciplinedly taking your stop losses, you need to change that immediately, because that will lead to over-proportional losers in the trading portfolio.
You also mentioned shifting your focus. What did you mean by this?
Typically, traders over-focus on singular events or suffer from something we call mental accounting. What I mean with the first is that traders over-focus on a singular loss that they have, but they need to evaluate their trading strategy in a batch of trades, looking at 50 or 100 trades at least, to come to a useful evaluation of the performance of their strategy. And the second point is the mental accounting piece, that especially with losses, traders often connect losses with something in their normal life, like a nice dinner or like a nice vacation, and they should make sure that they don't do that. They should look at overall changes in their trading account and move away from looking at these singular losses. And on the other side, also reinforce the idea of profits and maybe making the profits a bit more visible to them by buying something nice after a good trade.
Very valuable advice. Thank you very much, Malte.
Thank you very much, Cam.
Food is amazing.
Apart from the food.
Okay, I think all in all is great. I love it. I think understanding the psychology of the trading is the most difficult part that any trader faces. And trying to cover that, a lot of good points have been covered, because I've been reading it for the last 4 years, and it's a really, really amazing summary. So somebody who hasn't studied psychology until now, I think that's it. You know, this is the Bible of trading psychology. If they take these notes and just follow this, they would be fine with the psychology.
Yeah, that's a very good point on the psychology. It's very important, and that's what he covered very well today. And
what else has been?
Well, on the risk management, and on especially with regard to money management, which he touched on just before, that we closed for the lunch session. But I go back to raising. I like the idea of the psychology being covered, and I also like the title. Blink is a good title for the whole thing. You know, going back to making decisions on the spur of the moment.
Yeah, it's very important, especially about the money management, risk management, and psychology. And the tutor or trainer He's very cool and calm, explaining this situation, such a volatile things. It's very hard in technical things, but I really enjoyed, and it's very important for us.
Would you recommend our viewers at home to come along to the next one then?
I certainly recommend everybody, before doing anything, learn something. And this is one of the best learning, I think, is I recommend these things.
Well, we're joined now by George from ActivTrades, who's the organizer of today's event. George, thanks very much for joining us. Well, we've spoken to a few of the attendees today, and so far it's looking very positive. They're really delighted with this morning's events. You must be delighted too.
Very delighted. People, I think they came here and they've been getting what they came here for. You can see that from the nods on their heads. We try to offer our clients and our non-clients the opportunity to take advantage of the expertise of leading traders or experts maybe in trading. And it's been about the psychology in general. So there's been a lot of interaction, a lot of questions, a lot of talking about strategies and trading strategies and people sharing their experiences together. I think what ActivTrades did today is really offer the chance for the people in London to push it one step further and try to control their psychology in trading and be more successful traders.
It seems very important, the psychology of trading.
It is important. It's one of the main basics of a successful trader. On the long term, if you want to be successful in trading, it's not luck, it's not the markets, it's yourself and how you act upon events and how you interact with it. So it is very important. I hope our clients will take advantage of this. I'm sure we're going to see them again. The venue's been great, and we're going to do a lot of these in the future.